Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief.
Hey, good morning, everybody. Welcome to the morning brief. A couple of things I want to hit right off the bat. The volatility, the VIX index, which is a volatility index measuring the volatility S&P at the money options, which is what everybody uses to sort of measure volatility, went over 30 yesterday for the first time in a long time. So volatility is very high. Right at the moment, the VIX is 24.6, which is actually down almost 2 points from yesterday's open, or should I say from yesterday. Um, that being said, volatility is very, very high. And we are seeing wild, wild moves in the ES and the S&P 500. Anyway, so it's just something to note. Volatility is very high. Today is Tuesday, March 14th. What do we have on the docket today? 8:30 this morning, we had CPI month over month came in as expected at 0.4%. But this is positive. Anything positive is bad. CPI year over year, 6%, bad. Core CPI actually greater than expected at 0.5 versus 0.4%. All of this is just adding to the fuel that the Fed is going to have to raise rates, and sooner than later. So the reaction was wild, and I will go over that in just a second. But is what it is. Later on today, we have federal FOMC member Bowman speaking at 5:20 after the market closes, so no reaction there. So the rest of it is very benign, all yellow, so not to worry. We're now through the worst part, which was CPI. Taking a look at the daily chart. Isn't it amazing how it comes? I just love it whenever it comes right down to the bottom edge of a zone, and that's exactly what it did. Bounced off of that very big range from yesterday. Today it looks like we're gapping up slightly. See how that pans out. But where could it go? I get to retest these highs from the last couple of days because it's a low volume node, or right at a low volume node, around 39.80 top side. Bottom side easily, this is within range. The low here, maybe this low from back in December. It's also a low volume node. Imagine that. 38.20.75. So those are the two big numbers of where we could go today. Taking a look at the inventory or the cumulative delta. Yesterday, we ended up down on the day, and inventory was up. More bottom fishing, more buy the dip crowd. This continues to be the pattern. So we have some divergence, price going down, inventory going up. Again, sort of sets us up for a dangerous scenario. Price is up as we speak now. Inventory is up. Those are correlated at the moment. This sort of bothers me. We continue to have the buy the dip crowd coming in and buying. How long will they do that? And when they stop is when it gets really, really ugly. So keep an eye on that. Intraday, here's the wild, crazy. This is nuts. So the high is 39.50, and the low is 84.75. So say 16 and 40, 56 points, 4 ticks a point, 220 something ticks. That is insane. So there's just some serious volatility. Looks like they're trying to shake off the CPI number. It didn't go up nearly as far as it went down on the reaction. That being said, I am not sure I believe too much into this. I think they're trying to shake off the fact that the Fed still has reasons to raise rates, and of course, raising rates is bad. Is bad. So this is where bad news is bad news, and we should be going down because CPI continues to expand. It's not good, and Fed is going to have to react to that. So I'm not sure why they're shaking that off, but very negative news on the CPI. Stock Traders Almanac is negative today at 42.9. So there's a 42.9% chance the market will be up, which means that it is negative expectancy of about 57.1% that it will go down today. So historically, we have a negative bias from the Stock Traders Almanac. Hopefully that's correlation is good news. So whenever the historical bias and actual are the same, that's a good thing. That being said, hope you guys have a great day. Happy trading. Don't forget to subscribe and comment. Thank you so much. Have a good day. Bye.